Hello everyone, good morning. Thank you for joining us and welcome to this educational presentation of how to pinpoint your exit levels with range extensions. Now, I can't tell you how many times I get an email almost on a weekly basis of traders saying, Steve, I have a pretty good method or a pretty good trading style. It's just my exits that are giving me trouble. I either get out too early or maybe I wait too long because I think it's really going to go in my direction and then I give away a lot of my profit. Well, I'm going to teach you a really nice way to manage your exits. Now, even though this method is not designed to get you out at the top if you are long or get you out at the bottom if you're short, it's a great way to manage your exits. And I'm going to explain to you and share with you exactly what this method is. So you can start applying it as early as Monday if you'd like. For example, if we look at this older chart here in PG, we see that we had a buy signal generated, and here was where we automatically generated the first exit level. Well, you're going to see how you could have taken advantage of that prior to the market running out of steam and then going lower. And the beauty of that is that this is now automatically done on our platform, the PTS Primo Charting platform that I designed with Pro Trader Strategies. It's the educational portal that actually teaches you how to trade and automatically generates these exit levels for you. So welcome once again. My name is Steven Primo, president and founder of Specialist Trading. 10 years ago, I teamed up with Pro Trader Strategies, where we started formulating these webinars and courses with one goal in mind, and that was simply to educate you as a trader. That's our only goal. We're not trying to force feed you signals. We're not telling you what the perfect market is, what the perfect time frame is. That's up to you to decide. That's the only way in my 42 years of trading that I have discovered how a trader can become truly consistent. Not by taking your cue from someone else or someone in a chat room or someone on TV, but really making your own decisions. And people will say, well, how do I make my own decisions? I haven't been trained enough. I don't have enough expertise. I don't have enough experience. The way you do that is by educating yourself so that you feel confident enough to make those decisions. I've been trading for 4 decades now. I started out the same way most traders did. I really had a difficult time in the beginning, and then I ultimately was able to be consistent because of the same things I teach my students. So you're going to see how we dedicate ourselves to really educating you in today's presentation. But before we begin, once again, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using range extensions as your exit technique. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And please remember that all examples are strictly for educational purposes only. So once again, as you're taking a moment to view our required disclaimer, I'd also like to take this time, if you haven't done so already, I know a lot of you have, but please feel free to follow us on Twitter. I post a lot of great free educational information on a daily basis. A lot of signals that have been generated from our strategies to little bits of financial wisdom. So great free educational information. Please feel free to follow us on Twitter. Now remember, as I stated in the opening statements, we're a little bit different. You may have come to this webinar thinking, well, Steve's going to teach me exactly where to get out, and I just follow this all the time, right? Or Steve has strategies that all I have to do is blindly take them and I'll be able to retire in a couple of years or something like that. If you're thinking that that's what we do, you've come to the wrong place, because that goes entirely against our philosophy. As you see here, my goal is not to be the way other webinars you may have come to where they promise the world and then fall short of delivering. My goal is simply to teach you how to trade with the specialist edge. It's the same edge that was taught to me some 4 decades ago and what has been the cornerstone to sustaining me for 4 decades. So that's my goal and mission, to simply educate you the same things that have sustained me. So I'm not trying at all to trade for you. If you come here to think, finding out what you should buy for next week or what you should sell, I mean, that's a recipe for a disaster in my opinion, because if it's been estimated that 85% of all traders fail, then obviously finding out what to do from someone or something else isn't working. The only thing that has worked in my 4 decades of experience of trading is in making your own decisions. And the only way to make your own decisions is to feel confident enough with the education you have so that you can really feel free in deciding your own trading destiny, okay? So that's what we're really trying to do here today. And today I'll just give you a really little golden nugget of information and education so that maybe you can use this. It's up to you to decide. We always pride ourselves in our webinars where we don't promise you, some great technique or method, and then in order to find out how to apply it, you have to spend $5,000 to purchase our course or whatever. We don't believe in that. What we want to do is get you on board by showing our sincerity and really giving you something to trade with as early as the next day. And that way you can see our sincerity to really try to educate you. Okay? Now, since this is an educational class, I want you to ask as many questions as possible, but please wait till the end of today's class. I'm going to show you a lot of slides. In fact, I'm going to break precedent here and show you some slides that happened this past week with our platform. But if we stop for every slide, we'll be here far too long. I don't want to take all of your Saturday morning. So please, if you have a question, wait till the very end of class. The only question I will answer is this being recorded? Yes, it is. So if you have to leave early or if you're having some issues with your screen, you can't see or hear me, don't worry. We will send each and every one of you a link to this recording. Okay? All right, with that stated, let's begin. And we're going to start out by sharing with you exactly what range extensions are. I know many of you may know what they are. We have a good crowd here today, but there's possibly a lot of you that aren't familiar with range extensions. So what exactly are range extension levels? Well, the first thing you have to come to grips with is that regardless of what strategy you trade, today we're not going to be talking about strategies or one of my methods. Usually we talk about a technique or a way in which to trade. We're not going to be discussing that at all. In fact, you can apply this to any strategy you have, any technique, any method, any market, any time frame. Does not make any difference. So don't worry if you say, well, Steve, I'm kind of comfortable with my own strategy. That's fine. Don't worry if your strategy is based on fundamental news, if it's based on the full moon, if it's based on indicators, it makes no difference. But usually, I'd say about 80 to 90%, when all the requirements of whatever your strategy is, when they all come into play, they all happen at the end or the completion of a bar. Now, if you're intraday trading, that could be the end of a 5-minute bar. If you're a swing trader, that could be at the end of a weekly bar. It makes no difference. But when all the requirements come into play, that's when the bar usually closes, and that is called your setup bar. Okay? That's what we call a setup bar. So here's how we determine range extensions, because they're based off of that setup bar. Remember, it's when all the rules come to play, either the rules of fundamental news, when some earning announcement is made and you come home that night and see that they were great earnings, so you want to buy, or either off of some indicators. That's called the setup bar. So what you want to do is measure the range of the setup bar. Now, adding or subtracting that range, in other words, that amount of points, that amount of pips if you're trading currency pairs, but adding or subtracting that range to the top or bottom of the setup bar equals or determines the first exit level, which is called the 200% exit level, because it's twice the range. Now, adding and subtracting that range again equals a 300% exit level, and so on and so on. You can keep going as far as you want, but we'll share with you a couple of requirements, okay? That's it. So let me show you what I mean here. As we look at this generic chart, once again, don't get caught up in thinking, well, is this a daily bar? Is this a stock? Is this a currency pair? It makes no difference. Is this buy signal based off indicators? Is it based off fundamental news? Is it based off of the tides of the ocean? It makes no difference. Whatever your technique or strategy is, when all the requirements are met, all the rules are met, and that bar completes, that is called your setup bar, okay? So you want to measure the range from top to bottom. Now remember, the range is not open to close. I don't know how we got here in my 4 decades of trading where all of a sudden range equals open to close. That's not what range is. Range is from extreme top to extreme bottom, from the top of the wick to the bottom of the wick if you're looking at candlesticks. All right? That's what range is. So you want to measure that from top to bottom. If it's a currency pair, you measure the amount of pips. If it's a future, you measure the amount of ticks, the same thing. If it's a stock, you measure the amount of points, and so on. All right? So however that amount is, whatever range it is, that is your 100% measurement. Now, if you're long, as we see here in this example, obviously you bought at the close of this bar, let's say. And now what you want to do is measure the range. Let's say it's 5 points. You add that to the very top, not the close, but the top of that bar, that setup bar. And that will give you the first exit level. That's a 200% range. If you want to get more, okay, you add it to the 300, okay? It's that simple. Now, a lot of students like to say, well, Steve, I'm the type of trader that likes to get in and out and trade a lot. I don't want like 10 or so trades a day. Well, then what you most likely want to do is exit at the 200% and look on for the next one because we're not certain that price will get here. Other students would say, well, no, Steve, I like to trade maybe once a week. I'm a swing trader. I like to get 2-to-1 risk-reward ratio, or I like to, make sure that, I have a nice profit, but I'm not in this for, getting in and out. I'm not a day trader. Well, maybe you want to get out to 300 or even 400. Add the range again, okay? Still, another technique is to sell a portion of your position here, and then a portion of your position here, and then let it ride, okay? There's 1,000,001 ways to trade this. And someone can say, well, Steve, tell me, which way should I trade it? Once again, that's the way we're trained. We're always taught that someone's supposed to tell us how to trade, myself included, when I first started trading 42 years ago. It's a recipe for disaster. I'm not here to tell you how to trade. I'm here to teach you the things that have shown high levels of consistency. And then it's up to you to decide if you want to apply it or not, or how you want to apply it. I'll show you the different ways. Is there one way that's better than the other? Absolutely not. The one way that is wrong is when you try to mimic or trade like someone else. Remember, our philosophy is that no two traders should ever trade alike. We're just providing you with this education so that you can decide. Now, however you decided to trade this generic example, well, you would have won both times, either at the 200 or 300%. And let's look at the same example, but let's look at a downward example. Let's say your strategy is based off of the full moon, okay? We don't care what it's based off of, all right? Let's say on the full moon, whenever the market or whatever you're looking at closes lower, that's a sell signal, okay? I just made that up, so I don't, you may want to try that. I don't know. So it was a full moon, and the market closed lower, whatever you're tracking. All right, that's your sell. All the requirements came into place. You want to sell. Maybe you sell at the close. Who knows? But the point is that's your setup bar. All you have to do is measure the extreme high to the extreme low. Not the close, but the extreme low. That equals 100% of the range. Now, in order to come up with the first exit level, you take that ever amount of points or pips or whatever, or ticks, and you simply subtract it from the low. That gives you your first exit level, or the 200% range. If you want to go for more, if you think it's going lower, then you simply subtract that same amount again. Okay, that gives you 300. You can keep going, 400, 5, 6, 7 if you want. But these are the exit levels you can take advantage of. Once again, let's say you went short on the very close or bought some puts. When we get to this point right here, maybe you bought 2 puts. Well, maybe you cover 1 and let the remaining ride. All right. Still, what other students do is they say, well, when we get to the 200, I'll move my stop to right here, to the low, or to where I enter, right here. So I'll break even. If it turns around, I'll break even. Still, others may say, well, I'll sell a portion of my position right here, and then a portion here, and so on. Once again, there are just dozens of ways to trade this. Trade the way that makes you feel comfortable. You can only be consistent if you feel comfortable in the way you trade. How do I know that? Because when I was first starting, I bought systems just like everyone else. We didn't have chat rooms, but I subscribed to newsletters just like everyone else at the time. And I did whatever these guys told me to do. And I couldn't make any money. It didn't work. So nothing has changed in 42 years. Because it's still estimated that 85% of all traders fail. So obviously, copying someone else doesn't work. The reason is because it's not coming from you. It's not your trading persona. You see, someone may trade and have a lot of risk parameters, and they feel very uncomfortable with taking on a lot of risk. But what if you mimic somebody in a chat room and their style generates a lot of risk? Well, even though they may have 90% win-loss ratio, you can't trade that because you can't feel comfortable sleeping at night knowing you're risking that much. So it doesn't matter how well something performs for someone else. If you don't feel comfortable, it will not work. So this is why we provide you with education. So you can decide what makes you feel the most comfortable. Okay? Now, either way, you would have decided you would have had some nice profits here potentially on this generic chart. All right, so let's look at some more examples. And now a lot of our students say, Steve, I love this. This is great. But you know what? I trade tick charts. And it's kind of difficult in a fast market where I'm trading the E-mini to come up with these range extensions because I got to be really quick and figure this out. Sometimes the trade can be over in a matter of minutes. Guess what? Our new platform is designed to take that hard work out for you because it automatically generates these exit levels. That's the beauty of this. So regardless of what time frame or what market, even though you know the process, you know what it's based off of, this will automatically generate the exit levels for you. Let me show you what I mean here. I'm going to start out by sharing with you some older charts just so that you can understand the process and you'll see how simple it is. And then, as I stated earlier, I'm going to break precedents and I'm going to show you our PTS Primo charts that's been updated up to yesterday's action, and we'll show you some examples you could have taken, potentially could have taken charge of. All right, so let's look at some examples firstly that are older on our PowerPoint presentation. All right, here was the buy signal, an older chart in PG, okay? So all the rules came into play. That's our setup bar. We want to measure the range from top to bottom that will equal 100%. But in order to do that simply, all you have to do is click on Strategy 4. The drop-down menu appears and you click on Range Extensions, and guess what? They're automatically there on the screen for you. All right, so you can decide to sell everything here. You can decide to sell everything here. In fact, we've updated this since I did this presentation to include more range extensions. You'll see in just a few moments here. So there was the first exit you could have taken advantage of. You would have had basically a 1-to-1 risk-reward ratio, on balance. But a lot of traders feel comfortable trading that way. There's no right or wrong way to trade. If you make profits and you feel comfortable trading a certain way, that's the way you should stick to trading. All right. Now, say someone said, well, I'd rather go for a 2-to-1 risk-reward ratio. Okay, well, and you exit at level 2, which you could have taken advantage of a week later. And then ultimately, you see how we were running out of gas. All right, how about a shorting example, an OI, okay? All right, so you want to go short here. You measure the range extension, I should say the range of the top to bottom. You would subtract it. Here'd be your first, here'd be your second. Now, you'd have to do that by hand or by, some kind of hand calculator. But the beauty of our platform is that we take that hard work out of it for you. We want you to understand the process. But once you understand it, we can calculate it for you. Click Strategy 4, click Range Extension Exits, and they're automatically there. So you even know prior to entering the trade where you can get out. If you don't like the entry or the exit, I should say, then don't take it. Remember, once again, this is not a system. A system requires that you have to take the trade. That's how you can come up with statistics. That's how you can come up with numbers with, that generate some type of numbers to tell you how well you're performing. We don't believe in that because if you have statistics, that means everyone has to trade the same way. That's the only way you can derive numbers, by everyone doing the same thing. And what have I been saying throughout this entire presentation is that traders should never trade the way the group trades, the way everyone trades. You have to follow your own way. So that's why we don't have statistics or percentage numbers and things of that nature at specialist trading, because that would mean everyone's trading the same, which goes entirely against our philosophy. So let's say you want to get out at the first level, all right? Well, guess what? A couple of weeks later, you would have. But let's say you wanted to get out at the second level. Well, you wait a little bit longer. Ultimately, you got there and you see how the trend changed, okay? Here's another example, an FISV. A buy signal was generated right here. The automatic exit levels are generated. You can decide how you want to do it. Maybe you want to sell a portion right here and then another portion here and let the rest ride. Maybe you want to sell all of it at the highest point. Maybe you want to, a lot of our students, what they do is the minute we get up to the first level, what they do is wherever their stop was, they move it to where they entered. All right, there's a lot of different ways, and a lot of students even still will take it as an exit level, or I should say a stop level. When you get up to exit number 2, they'll move their stop up to exit number 1 and continue to ride if it goes higher. You see how many ways there are to trade this? There's no one right or wrong way. The only wrong way is when you blindly follow someone else's trading style. Trust me, you should never do that. Take it from someone who did that 4 decades ago and lost a lot of money. And as you can see, ultimately you reach either one of those levels. Here's another sell example in all ALL. Exit levels are automatically generated once you click on the drop-down menu, and ultimately they were hitting those levels. Now, I want to show you some other market examples because I know this just doesn't take place in stocks. As we look at this 1-hour chart of the E-mini, remember these are older charts. A buy signal is generated. Click on the Strategy 4 tab. It makes no difference. range extensions on this hourly chart, the range extensions are generated off of the setup bar. Here's the first exit. You could have exited everything. If you're trading a couple of contracts on the E-mini, maybe you want to sell one and let the rest ride or exit at 0.2. Okay? Probably would have been a good idea to exit at 0.2 because look what happened after that. You see how valuable these exit levels are? Here's a Canadian dollar chart. Daily bar, a buy signal is generated. Exit levels are automatically placed on the screen. Here's the first exit. If you wanted to get out, let's say this was taking too long. You say, I want to get out of this and follow in something else. Okay, you have a nice profit there. If you want to stay in longer, you would have exited at point number 2 before the trend changed again. Now, we have added some different levels. We've added a total of 4 different levels on our platform now. What we say, especially to beginning traders who are not used to using this, have never applied this before, is we say at the 4th range extension or the 4th exit level, we would suggest, remember, we're not requiring because that would mean we're telling you how to trade. We would suggest, especially in the beginning, exiting out of your entire position because many times we've seen at the 4th exit level, that's where the trend changes. Now here it exited at the 2nd level and it changed. But if you've gone up to the 4th, many times you'll see that it's over. Okay, so while you're experimenting with this, please remember that suggestion. Now, I'm going to show you some live charts here of things that happened this last week with some of our signals, just to show you that I'm not just sharing charts that happened 6 months ago, that's where this happened to work and it hasn't worked since. I know a lot of webinars do that. I've attended many webinars in the past months, and I've seen a lot of great examples, and I look at the charts and they're like 3 years old. And so I wonder, does this stuff work now? Well, that's why we always try to share with you current updated charts so that you see that this is not just some fly-by-night technique that hasn't worked in years. This is, we're going to show you examples that happened last month, that happened last week, okay? But remember, please take one last look at our disclaimer because we're going to show you a lot of performance results, but we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. We're required by law to share this with you first, so please remember that all examples are strictly for educational purposes only. All right, so let me toggle over onto our charts. And this is our chart of UNH, all right? This is the month of June coming into July. We see here that we had a really nice run. All right, let's just show you some of our examples here with strategies that we actually used and show you how simple it is. When we get a buy signal, we have an arrow that appears underneath. Now, we've made the process of generating exit levels even simpler. We're always updating our platform to make it easy for students so that even though we've taught you what you're looking at, you can make it simple and apply it really easy. Everything is one click away. Now, before we used to require that we would click on, like say that I believe this is strategy number 9. You have to click on this, and you can still do this and click on range extension exits if you want. But rather than have to do that, I told you we made it simpler. All you have to do is double click on the arrow beneath the signal. All right. Now you can see it says strategy number 9. Double click that, and you get a little mini menu here. These are all different topics we've talked about in past presentations. Today we're only going to be talking about range extensions. You click that on, all right, as you can see, they're automatically generated. So look at that. Let's say you had bought at 243, and this is UNH, and this was just a week or so ago. Well, if you wanted to take the first exit, well, there's a nice 5 points. The second one, you got about 10, they're 15, and roughly almost 20 points here in roughly about a week. Now, this is what we suggest as I get out the crosshair. This is the 4th exit level. We would always suggest, especially to beginners, to exit your entire position at this point. Why? Because many times, nothing is guaranteed, but many times we've seen that the trend changes. Now, someone could look at this and say, well, Steve, the trend didn't change, it went higher. Well, yes, but we don't know what it's going to be like next week. Perhaps next week you'll look at this and go, wow, I wish I would have gotten out at 261, 262. And now it's traded at 252, 10 points lower. So that's not a prediction. This does not predict how high or how low something will go. It just gives you some nice exit points. Now, there are different ways to trade it, but if you had exited here, let's say you entered at this point and placed your exit somewhere below these levels here, you'd basically have a 1-to-1 risk-reward ratio. If you get out here, you have a 2-to-1. So you're basically making twice as much as you risk. Here you make 3 times as much as you risk, and here you make 4 times as much as your risk, all right? Another way to trade it is you would simply if let's say you had, let's say you're lucky enough to have 400 shares. Maybe you had four contracts. Maybe you had four options. You'd sell one here, one here, one here, and everything else here. Or maybe you just sell one here and then everything else up here. Or maybe you'd sell a couple here and a couple here. There's no one wrong way to do it. You have to do what makes you feel comfortable. Now remember, these exit levels are based off of the setup bar. So different setup bars will generate different exit levels. For example, this setup right here, which is the same strategy, strategy number 9, once you double click this and hit range extensions, would have had totally different exit levels, all right? Now they're still good. Let's say you place your stop right below the low of that bar, you're still getting a 1-to-1, 2-to-1, 3-to-1, 4-to-1. So what a lot of our students like to do, if there's a signal that was generated just previously, or maybe even afterwards, that gives a greater exit, they'll take that one. Where still other students will say, you know what, I'm going to stick to these range extension levels. I don't care what this one says, you know. One better than the other? No. The only thing that's better is when you decide, not me. We're giving you the information here for free. It's totally up to you, all right? All right, so that was one way. Let's clear that, and let's look at another one, a more prominent stock here. Let's look at Facebook, okay? Facebook had a nice little run here this last month. Were there any signals generated? Let's look at strategy 3A. This is one of our signals designed to capture momentum moves. And yes, we had a nice buy signal right here at the end of June, okay? Let's click that on. Click on range extensions, and guess what? The high was 205.24. That was the high exit level, okay? If we click on our data box, let's go to the high. If you look to the left, the high was 205.30 on Friday. And what's the last exit? 205.24. So you would have been able to exit everything at that last bar, which happened just yesterday, okay? Did you have to get out there? No, you could have gotten out at 194.68. It's entirely up to you. There's no one right or wrong way to trade this, okay? Remember, the first technique I share with you is just simply getting out at certain levels. You have a fixed exit. You say, I'm going to get out at exit number 2, exit level number 3. It's up to you. Another way to use it is as a tracking technique, okay? Let me just exit this here. Let's just show you. Let's say you had bought down here at the close, okay? What a lot of students do is say, okay, I'll place my stop right here below this pivot. When we get up to the first exit level, I'm moving my stop to unchanged, right where I bought, okay? So as we got right here, all right, you see it didn't go down. We weren't stopped out, and we wait for it to get to exit level number 2. It got up to exit level 2 in the first week of July, so now I move my stop up to here. So if things changed, at least I'm going to make a 1-to-1 risk-reward ratio, okay? But it didn't. It kept going higher. It got up to the exit level number 3, so now I move my exit right here and my stop up to here, 198.20, all right? And as we suggest, rather than continue doing so, we place an exit for all of your position right here, which you would have exited altogether and had roughly about a 4-to-1 risk-reward ratio. Not a bad little trade, huh, in about 3 or 4 weeks. And that's the way, by listening to the market. We're not trying to predict how high or how low something will go. We're just adding structure so that you can be in charge of your trading, so that you don't feel like a leaf at the mercy of the wind anymore, where you feel like, how come all the other people make money and I don't know what I'm doing here? I bought this $10,000 course and I don't know what I'm doing. Every trade's a loser, okay? Or I can't take this risk. Sure, they're winners, but I just feel so uncomfortable, I don't even take the trades. Here, for the very first time, you can be in charge of your own trading destiny. All right, let's look at a couple more examples and see how this works. Let's look at SQ, okay? Another stock that had some nice movement here. Okay, we'll still apply another one of our strategies. Let's look at a momentum strategy, strategy 5. Had a really nice buy signal here, the second day of July, okay? Do the same thing. All we have to do is double click that, click on range extensions, and we see here once again that we would have exited at the 4th if we decided to take that. And someone could say, but Steve, it went higher the next day. Remember, this is not a technique designed to get you out at the top or at the bottom if you're short. It's simply a way to add structure, because so many traders trade without any idea or clear plan as to what they're going to do. How many times have you gotten into a trade and all of a sudden you have this windfall and you're saying to yourself, my goodness, I'm doing really well here. let's just say you decide to get out and it continues going higher and higher, all right? Let's just say you don't get out and you think it's going to really make a killing there, and then it all of a sudden falls out of bed the next week, and then what you had as a winning trade turns into a loss, right? Sound familiar? Sure, it happens to everybody. It's because you're trading without a plan. You don't have any structure. You need a little bit of structure so that you can make your decisions, okay? You need something to really lock you in so that you can decide how to do this. You know, it's like someone driving. If there were no roads, everyone would be driving just all over the place. But once you add structure in the form of a road, everyone knows what the rules are, and you can get to where you want to go because of that structure of a road, a clear-cut path. This is what the range extensions do, okay? So that's an example there with SQ. We use strategy number 5. Let's go on to a sell, okay? We've looked at enough upwards opportunities. Let's look at something that didn't work out well to the upside, but we had a really nice sell opportunity. This was VMW. I'm going to show you different ways you could have traded this, all right? If we look at strategy number 9, which was one of our great pullback strategies. All right, if we applied this right here, we see the range extension, the same bars come up, and applying the same technique, let's say we use the tracking method. Well, we sold right here, let's say on the close, and right here we move our stop to unchanged. Right here we move our stop down to level 1. Right here we move our stop to level 2. So now we've locked in a 2-to-1 risk-reward ratio. And we were waiting to exit everything here and never made it. So we got locked out. But look at, had we stayed in, this is the way most traders trade. They're hoping for the best, and then it goes and turns into a totally different upwards direction, and they most likely would have got stopped out with a loss. But you would have been able to capture at least a 2-to-1 risk-reward ratio exit, and now you have a chance to get back in again. So now you take this, and as you can see, we went. If you had traded the other way, where you just hold on to the end, you would have had a nice trade here and gotten out before the trend changes. Okay, you see how simple that is. Let's look at an example now where we're looking at an ETF, because ETFs, a lot of students will say, can we trade this on different markets? Yeah, oops, I'm trying to be an ETF. Let's type in the spiders, because you can use this as a market directional tool as well. So even though you don't necessarily trade the spiders, you can use it to define and see how you think the market may be going. Let's go back to momentum strategy number 5 again. And as you can see, strategy number 5 generated a buy signal on the 9th, just last week, in the S&P before this nice rally we had last week. All right. Now, if we apply the range extensions, we see here that we've only gotten up to range exit level number 1. So if you're trading conservatively, you most likely would be moving your stop right here to where you entered on the close, let's say. Now, if we have a rally next week and we get up to here, range extension 2, you may, it's up to you, I'm not telling you what to do, but if you were thinking about the market, you may think the market's okay until we get back down to this level. Now I'll have to use our kind of extension here to see how this looks as we decrease the bars. And you'll see we're projecting using this, even though this is not predicting, it just projects where you would exit if you got out here. You would exit everything at roughly 305.68. So this is a great way to really corral in and give you some structure in how to trade. As you can see, there's a number of different signals, a number of different strategies. You do not have to use our platform to do this, all right? Remember, you can start doing this if you have a platform of your liking you want. Sure, go ahead and apply it any way you'd like, but see how simple it is. Everything is one click away. You will not have to get your hand calculator and go, oh boy, I forgot, where's the next exit level? Gosh, I didn't type that in, and oh my goodness, I may be missing it. Or this here, it's automatically done for you. You can also change the colors. You can change the structure of the line. You make it lighter, darker. We give you all those options as well. Okay, so you have an idea of how well this worked last week. Let me just share with you one more. Let's look at a downward market. What was it? Strategy 5. Let's look at a downward market. Another upward market. Okay, FCN. Okay. That's at strategy number 4. This is our most consistent and popular strategy. Look at the buy signal generated at the end of June, right here at the very bottom of this sell-off. And look how well this technique I just taught you today could have been applied. You just click on range extensions, and you would have, actually been up to level 3 and been able to move your stop up to here, or you could have exited any one of these levels. as we decrease this here, you'll see that level 4 has yet to be reached, but we're very close. All right, so this is how simple it is. Once you know where to get in, you just simply apply these range extensions and they add structure to fine-tune your exits, okay? It's that simple. Okay, so let's go back to the presentation. Remember, all examples I just shared with you were strictly for educational purposes. In no way can we guarantee that any of the results I just shared with you would be repeated in the future, okay? So let's recap before we go tell you about a great offer we have for all of you today. Remember, range extensions. In order to calculate this, if you want to just start using it right now afterwards, remember, measure the range of the setup bar. That's where all the rules come into play. By adding or subtracting that range to the top or bottom of the setup bar, you will generate exit level number 1, or the 200% range exit level. Adding and subtracting that range again equals a 300% exit level, and so on, okay? So you can just continue to add and subtract. We would say at a suggestion at the extension number 400, we would most likely get out of everything. Okay, before you ask me questions, let me ask you, do you think this tool could have helped your trading this past year? Remember, if you've had any problems with your exits in the past, if you've gotten out too early, if you've stayed in too late and given away a lot of your profits, do you think this little structure could help you in pinpointing and fine-tuning your exits? Well, to thank you all for taking time out of your Saturday morning and joining us today, we have a great offer for all of our Saturday attendees. We're going to offer you our PTS Primo charts. We're giving you a 30-day trial for only $7. And what does this come with? Well, obviously, it comes with, as you just saw, our proprietary entry, exit, and trending tools. We just shared with you the exit. We also have entry tools and trending tools. We also have our enhanced buy-sell line. I've talked about this in past Saturday webinars, where this tells you the overall trend. You will increase your odds for consistency if you only trade buy or sell in sync with the buy-sell line. We also have short-term pattern recognition features. We have a signal scanner, over 90 of the most prominent technical indicators, free Bloomberg TV so you can watch any economic report or any indicator that comes out with fundamental indications as they are happening. And lastly, this is all followed with personalized tech support. So we're offering you all this 30 days. This is 4 decades of experience of things that I've accumulated for only $7. Remember, we're unlike other webinars you may have attended. We're not promising the moon and saying, we will give you all this information for $5,000 and all you have to do is become a lifetime member. We don't believe in that. We want you to see our sincerity in trying to teach you. So we're giving you a chance to come on board for only $7 for 30 days. Check it out for yourself and see if it makes sense. If it doesn't make sense, guess what? You just learned a great technique you can start experimenting with for free. So we always try to leave you with something, even if you don't decide to become a student of mine. But if you do decide and want to take advantage of this, here's how to take advantage of this great offer. Contact Pro Trader Strategies. I designed the platform and all of my tools with them. You can either email them. I would suggest calling them if you have questions at area code 310-598-6677. Now that link you see at the bottom is the link that will take you to the sign-up page, and it will give you some more information about our platform. But it's not a live link. If you want a live link, just go to the chat box on the far right-hand corner. I just posted a live link in there, and you can that will automatically take you, by clicking that on, it will automatically take you to the sign-up page, okay? If you have questions concerning the platform or costs, or maybe you want to purchase a strategy, there's no obligation. All you have to do is simply contact Pro Trader Strategies, okay? Now, as I promised, we'll reserve the last few minutes here for any questions you may have. Just go to your question and answer box and type them in, and I promise I'll get to them. Let's see. Someone's asking, Sean is saying, I'm a student, I purchased a strategy pack, but it didn't come with the trading platform. Can I use this in any other platform? Can I use any broker? Yes. In other words, our platform is just an educational platform. In other words, we are not affiliated or subscribed with any brokers. So what a lot of our students do, and myself included, is that I'm always looking at the platform in real time, and then I toggle back onto my other platform where I enter orders. So I'll look for signals, I'll look for setups using all the different techniques on our platform. And if something comes into play, I go right back up to my other platform. I'd say the majority of our students trade that way. Now, if you have any questions about concerning the platform, such as technical support, or you want to become a member, all you have to do is contact Pro Trader Strategies. Once again, there's absolutely no obligation. and they can set you up with something, and they will, be sure to, help you. Now, we have different data subscriptions. Some of the data is delayed to keep your prices down. There are other real-time data feeds. Once again, this is all decided upon your subscription. So contact Pro Trader Strategies. They would be happy to help you and happy to work with you. Some people are saying, does this work with E-Trade? No, remember, once again, the platform is separate. You're getting your data, and if you have an E-Trade platform or the way in which you enter your trades, all you have to do is just toggle back. I personally, for my personal trading, and remember, this is not a recommendation, but I have used Metastock, I have used E-Trade, I have used TradeStation. All I do is I have those platforms up there on my screen as well with the PTS Primo Charting platform. And then I'll just toggle back when I want to enter a trade or look at something, back and forth. It's that simple. I would say the majority of traders trading today trade that way. They have usually more than one platform on their screen, okay? So it's really simple. Remember, any pricing, any discounting, any way to upgrade yourself on the platform is done through Pro Trader Strategies, okay? Just give them a call, and they will be happy to take care of this for you. Someone is saying from Miami, Florida. No, we're located on the West Coast. We're not in Miami, Florida. So it would probably, if someone's trying to contact you with these same ideas, they're probably trying to steal our style and tell you it's something that they've done. But we're on the West Coast, so no, we're not in Miami, Florida. Okay, but remember, we are an educational company first. If you're looking for someone to tell you the answers, to tell you when to sell, to tell you when to buy, you've come to the wrong place. This is not what we do. Think of the entire industry. It's based on that premise of come to our site. We have the perfect things for you to buy for the next day. We tell you where to get out. We tell you the perfect time frame. And the entire industry is based on that style. And the entire, I would say, category of traders, 85% usually fails within the first year. So obviously this doesn't work. Take it from someone who was doing the same thing 42 years ago. It doesn't work. I was lucky enough to have some mentors who said, Steve, the only way you will become consistent is by making your own trading decisions. Because trust me, when they taught me all the things I teach all of my students in my course, I asked them the same thing. I said, listen, why can't I just copy whatever you guys are buying and selling? And they said, because you would not learn. And ultimately, when you had to trade on your own, you would be trying to copy or mimic a style that's not comfortable with your own trading persona. You have to figure out if you're someone who doesn't like a lot of risk or someone who likes a lot of risk. You have to decide if you want a lot of trades or you don't want a lot of trades. You have to decide if you're a short-term trader or a long-term trader. And then fit all the education to meet that, to make you feel comfortable. You cannot follow what someone else does because you'll never become successful that way. And that was probably the greatest lesson they taught me. So this is what I'm trying to impart onto you by giving you sound fundamental education that stood the test of time, mentoring you, working with you so that you can ultimately decide how to do it on your own. And then you're free to leave. In fact, we don't want you to be around. There's no reason to come here to get nightly signals or information. We don't believe in that. We want you to go out and make it on your own. So that's what we do at Specialist Trading and Pro Trader Strategies. And that, in a little bit, just a little bit of golden nuggets today I tried to share with you and give you some little bit of education today, okay? As we close, I just want to say thanks for taking time out of your Saturday morning. I really wish you the best of luck. I hope this comes into play for you. Remember, please paper trade range extension first to see if they work for you. A lot of students may not feel comfortable and say, no, this is not really my cup of tea. That's great. I want you to decide if you like this or not. Don't ever trade something that you feel, well, I guess I have to trade this. Trade what makes you feel comfortable. But I hope you have gained a little bit of insight into how we teach and how we really want to educate you. And I wish you the best of luck. But most importantly, I look forward to all of you becoming students of mine and members of the PTS Primo Charting platform. Thanks for taking time out of your Saturday. I'll see you next time. Bye-bye.